Jim, let's shift gears, talk a little bit about oil prices. We get the rig count, of course.
Yeah, now the rig count is going to be, this is the Baker Hughes rig count. I remember in the 80s, we were glued to it, now we're back to glued to it. And I just want to point out that Pioneer Natural, I have a piece this morning that's up on the site, talking about how they're increasing their rigs by 42%, that's 12 to 17. But you're going to be, what you have to do is look at individual capital expenditures of very smart companies. Pioneer raises all that money, the deal then flops. The previous deal flopped that they did in January, but it turned out then if you bought it, when it was a couple of days later, you end up making a lot of money. Pioneer considered one of the absolute smartest operators. They have the lowest cost in the Permian, and the Permian is the best area in the country, even better than Eagle Ford. And they wanted to have 28,000 more acres for the rights with Devon, which means that people are drilling again. We heard Harold Hamm last week talk about oil was going to 60, 70. I said he is a contrary indicator. I do believe that Pioneer is saying the price of oil is not going to go down that much lower, or they would not have raised this. They would not have sold stock. But it's important to remember, if they sold stock, maybe they thought their stock was high versus oil. Exxon, as Bob Pisani pointed out, 52-week high. Exxon's a bank, not an oil company. It's a conservative way to play oils, and people want to be in an oil, but they want a soft oil. It's like being in MasterCard in order to have a financial. Okay, it's not an oil company per se that is levered to the price of oil, and has never been as long as I've been involved in business.